Hello and welcome back to the Geordie Pig Investor channel. Today we are going to be having a look at, is Hershey Co stock a buy right now? What is Hershey Company? Stock ticker HSY. The Hershey Company, together with its subsidiaries, engage in the manufacture and sale of confectionery products and pantry items in the United States and internationally. The company operates through three segments: North America confectionery, North America salty snacks, and international. It offers a wide range of products including chocolate and non-chocolate confectionery products, gum and mint refreshment products, protein bars, and pantry items. The company exports its products to approximately 80 countries worldwide. Some key stats about Hershey: they are based in the United States, they are part of the consumer staples industry, have a market cap of $26.27 billion. They went public in 1927, have over 21,000 employees, have a very nice 15-year dividend growth streak, and also a very healthy 5-year dividend growth rate over 10%, and they currently hold a yield of over 3%. Over the last 6 months, we can see Hershey's is down over 8%, and that is why today we're going to have a look into the company further and see if it is currently a buy, hold, or sell. Hershey's earnings call and fundamental analysis. Hershey's recent earnings call for Q3 of 2024 highlighted mixed performance due to various market factors. Net sales declined by 1.4%, primarily due to volume declines and retailer inventory adjustments, although price increases contributed positively. The company also saw challenges in gross margins attributed to volume deleverage and an unfavorable sales mix. Key strategic updates include efforts to revitalize chocolate sales through the gold standard planogram and promotional optimizations. Hershey's is also emphasizing innovations in its sweet segment, such as new flavors and forms like the Jolly Rancher freeze-dried, and partnerships including a Harry Potter themed initiative. Additionally, the company faces ongoing pressure from inflation, particularly in cocoa and sugar prices, which are only expected to rise in 2025. Despite these headwinds, Hershey's remains confident in its long-term growth strategy, focusing on both productivity and evolving customer needs. Some fundamental analysis on the Hershey Company is that they have a positive free cash flow at $1.7 billion, they have exceptional ROE at 45%, have positive operating income at $2.5 billion, positive gross profit at $4.9 billion, positive net income at $1.8 billion, very good long-term solvency, a high Altman Z-score at 4.86, which is very nice to see. They do have average debt to equity at 1.04, with poor short-term solvency and positive net debt 3.8 billion. Moving on, we're going to have a look at Hershey's free cash flow. Free cash flow is the money a company has left over after it pays for all of its expenses and any investments it needs to make to keep the company running smoothly. Free cash flow has a massive impact on the direction a company is heading, because if they have a negative free cash flow or that cash flow is declining year on year, it's not going to be a good look for the company and they're going to have to start pulling that money from other areas of the business. Hershey's free cash flow looks extremely promising as it has been steadily increasing since 2015. Their FCF for the past year has been strong at $1.65 billion. This was driven by an operating cash flow of $2.35 billion, offset by their capital expenditure of around about $693 million. In the third quarter of 2024 alone, Hershey's generated $567 million in free cash flow, reflecting its continued efficiency and cash generation despite market challenges. The company's free cash flow yield, measured relative to its enterprise value, has been reported with an EV to FCF ratio of 24.8, suggesting a solid cash return relevant to its market valuation. Hershey's robust FCF supports its dividend payment and strategic investments, indicating financial health and resilience, especially with its healthy payout ratio at only 59% currently, showing there's plenty of room for growth in that dividend payment. Moving on, we are going to have a look at Hershey's discounted cash flow valuation. DCF is a method of estimating the current value of a company based on projected future cash flows adjusted for the time value of money. The DCF valuation process calculates the present value of a company's forecasted cash flows based on selected operating models. If I remember about Hershey's price currently, it is $179. And when plugging in a discounted rate at 7.6% and a terminal growth rate at negative 2.9%, we can see on the worst case Hershey would be valued at $56. When plugging in a discounted rate at 7.2% and a terminal growth rate at 0%, Hershey's price would be worth $98.23. And when plugging in a discounted rate at 6.9% with a terminal growth rate of plus 2.9%, we can see that Hershey would be worth $200.94. I not only look at the DCF valuation, but I also look at something called the relative valuation. By looking at the relative valuation as well, we can then come up with something called the intrinsic value. The relative valuation is a method used to value a company by comparing it to other competitors based on certain metrics. The metrics it includes is EV to revenue, EV to EBITDA, and PE ratios. When plugging in my numbers for Hershey Company, we can see on the worst case scenario, they were valued at $174.64. On the average case scenario, being worth $193.07. And the best case scenario actually being worth $213.67. Like I just mentioned, we can then come up with the intrinsic value. This is calculated by combining the two stocks together and dividing by 2. The results I have for my intrinsic value are the worst case scenario, Hershey Company being worth $115.31, average case scenario being worth $145.65, and on the best case scenario, Hershey Company being worth $207.30. I then like to look at another valuation method so that I have a diversified range of different valuations for the company and I feel confident on my final valuations. The next one that I look at is the Wall Street estimates. The Wall Street estimates are an average estimate of a public company's quarterly earnings and revenues that lead to a valuation of that particular company. These numbers are forecasted by a company-specific analyst who provides research on that particular company and therefore comes up with what they believe is an accurate valuation for that company. A company inside of Hershey's is going to have multiple analysts looking into the stock. These analysts believe that Hershey Company's 1-year price target would be $154.53, which is a 14% downside. On the average case, they believe that Hershey would be worth $186.21, which is a 4% upside. And on the best case, they believed Hershey's would be worth $233.10, which would actually be a 30% upside on that current price. Now that we have all of our three valuations, I can combine them together and get my final average, worst and best case scenarios and see if Hershey Company is currently trading at an attractive price. On the worst case, when combining my valuations together, we can see Hershey Company would be worth $128.38. So with a 10% margin of safety on the worst case price, you'd be looking to buy Hershey Company at $115.54. And with a 20% margin of safety, you'd be looking to buy them at $102.70. On the average case price, we can see Hershey Company was valued at $159.17. So with a 10% margin of safety on this price, you'd be looking to buy at $143.25. And with a 20% margin of safety on this price, you'd be looking to buy Hershey Company at $127.33. Finally, on the best case scenario, we can see Hershey Company is valued at $215.90. So with a 10% margin of safety on the best case price, you'd be looking to buy them at $194.31. And with a 20% margin of safety on the best case price, you'd be looking to buy Hershey Company around about $172.72. What does this mean for Hershey Company? Is the stock a buy right now? I think that Hershey's is an attractive choice for a dividend investor due to its consistent dividend growth, backed by strong free cash flow of $1.65 billion in 2024, ensuring reliable payouts. Its conservative payout ratio leaves room for future increases, while the company's stable business model and low market volatility at only a 0.37 beta provides dependable income with lower risk. Hershey's ability to generate cash even in challenging environments makes it a solid income-generating investment. Having said this, right now at the current price, after doing my valuations, I want to see the company drop further in price before I would say is it a good valuation to buy the company right now. What do you think about Hershey Company? Is it currently in your portfolio, or are you looking to potentially add this stock to your portfolio with the current drop in price? Let me know your thoughts in the comment section down below. I hope you enjoyed today's video. Please let me know of any other stocks you want to see a full breakdown on. Thanks for watching. Please like and subscribe. This is the Geordie Pig Investor, over and out.